Good morning. It's Saturday at 10 o'clock a.m. Pacific Standard Time. The date is 7/23/2011. What are we talking about? We're talking about the long-term bull rally on the Dow. And we have had a expansion. And one of the things I want to make clear here is that these expansions, as you know them, if I go back over here to the Dow back in the later 70s, is that we had a great expansion that started after the 87 crash over here. Is we had a great multi-year expansion that started the breakout here in 96 all the way to the failure. Now, when you look at it in this time frame, 95, but here's the trend line that we'll draw. Okay? And what we're going to do is we're going to draw that trend line right there at 48.48. 1996 breakout resistance level. And we got above it. And we went all the way here. And we had, at that time, we had another big economic expansion. Okay? But we also, over in time on the Dow, had another economic expansion that hit a double bottom in 2002 under the Bush administration. And watch this. This was another expansion right over here. This was part of the 2007 early top. As I move over here and I take that same trend line, you can see where the 2008 reversal started right here. My point of it is, though, is that they all failed. Every one has. There's never been one that hasn't. We have stimulated this economy and torched the U.S. economy as far as I'm concerned. I don't care how rich that corporate America may be, because they're making money in other parts of the world. They're not making it here, though, as good as they should out of the U.S. Most of their earnings on the bottom line and top line are coming from around the world. And I'm saying that there's a lot of problems going on. What I am trying to say, that early on MMTs, for the new ones in the school, is that every one of these economic stimuluses, expansions, all fell. There are time frames that go within these expansions. That time, a great time to be a bull here and a great time to be a bull here. And it was a great time to be a bull in this expansion. That's how markets and capitalism works. But we know that after the bull expansion is that there is failure. It always happens. Basically, 2011, which we're going to take a look at right here, I'm going to draw a trend line MMTs. It's going to be right there. This trend line here, I will put right here. Bingo. There's this high was lower than the original high at the end of 2007. We're right up on the ceiling of this now. From here, this is your expansion. This is bailout nation. Just like I'm bailing out Italy, I'm bailing out Greece, I'm bailing out Portugal, I'm bailing out Spain. Let's not forget Ireland, Greece, bailout nation. Fails. So part of the earnings are really great in this expansion, as they always are. It's all stimuluses, just like this expansion. What we look at is on a multi-yearly level, monthly level, is how far we've gone in the expansion and where that failure potentially comes, or where we go to the top of where that failure is going to be. We've had 2 months that pulled back. We got a rising 10-month moving average. Nothing but bull all over this. And this is how people make decisions, because it's public standard technical analysis. But there's nothing bearish about this monthly chart, other than every pullback we had was viable. 2010, didn't want to break. We have all this live analysis back in 2010, just like we're given here, just like we called for the correction there. But that rising monthly moving average is how people interpretate that this is all great. And each time that we have corrected in the bull cycle, here's where the bull cycle started. They always come late. 11-1 is when we got the monthly buy signal. But you would want to know how to buy the lower end of that MACD down here when it mathematically starts to turn so that you're over here. By the time you got a monthly buy, so, you know, this was back at the peak here on 5-1 of 2009. And we started to go up, ascending, and we sure ascended. The monthly chart is 91.94%. When we called for this correction over here, we were at 94%, 93%. It's a public standard indicator that says that even though that we're having a bull rally back up toward the tops and can go higher, is that we're going to get more extremely overbought. We're going to have another one of these. Doesn't mean that it's going to be 2 months in a row. But if the debt ceiling, the U.S. government doesn't do the right thing and we get downgraded, buddy, you're breaking that trend line. This is the long-term breakout. See where the breakdown happened over here at the monthly half bar back in 2008? That's been your long-term support level, but more importantly is that in 2010 we broke above there and we've held that trend line and we've ascended up and we have tested that very trend line. But notice that the double month reversal, that low here and this low is higher than that last low on the dips. And the blue line is a 10-month moving average that continues to rise. So as we go up within the summer rally structure and the great July quarterly earnings that we've experienced, throughout all the contagion is that we continue to go higher. If there is a resolution, we could go all the way back here on the Dow, and I'll just show it right here on a trend line. That's going to be where this is. I'll draw a horizontal trend line. It's right there at 13,277 is the neckline of 2007. Now, having said that, is we're going to hit in the shorter term cycles called shorter term oversold and overbought. And why are the dips always buyable? Because they are. They're always buyable. These dips are always buyable. Okay? Because the monthly sell signal has been here 1, 2, 3, 4, 5, 6, 7, 8, 9 months. Started right there. But we put the bottom over there when this was at the bottom and it started coming this way. We teach you, whether it's an intraday level or whatever level, whatever time cycle level, is that public standard technical analysis is one thing that people make decisions on, the big money and everyone, because there isn't anything else out here for them. But for you now, MMT, you have a totally different system. And what is that system? It's this right here. It's the SMF MMT platform. The tops, this is the rally from the double bottom here on our platform. Now, I'm going to take this out, and you can see the whole thing here. Just like you can see on a standard technical analysis chart, I couldn't make decisions on it. I can tell you what it says. However, in our system, prices everything in, every indicator that you could want, and everything in a mathematical format. And a mathematical format is mathematical weakness, mathematical strength, mathematical directions change, then they change, they come down. This is the part that we're going to be looking at right here in our platform. And basically these are the tops right here at 12,750. We're right there on a daily level. It's bullish because we're holding the daily half bar at 12 659. Look at the daily bullish buy bars, because everybody thinks that our problems, we got overbought here. We said we were going to correct. We're right back up in the same overbought zone. How do we break it? It's very easily. If the U.S. government does the right thing, people are going to say, oh, that's great, markets go higher. But we're going to be overbought. So any moves up here, we're going to be selling into it. We're going to be selling short. When we get the next breakout, we could potentially come right back over here. And this date right here was on 5/2 when we called a short on the Dow, before the Dow was even going to go down. And you could see how that Dow put in that bottom. You could see on it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in shorter term breakout. We come back. We tested that half bar right here at 12. Here's a half bar. That's at 12,344. That daily. And there's that wick. Now remember that each delta line on here is 92.41 on a daily. That's Dow could go up 92 points, could go down one full delta, could be a half delta. Doesn't matter. It's got it calculated here. So the next half delta up is going to be 12,700 and some change right here. Okay. That's this one here. On this daily chart. What I want people to know is that this high right here, this intraday high, was 12,753. The Dow closed at 12,681. Right here, down 34 handles. Caterpillar missed its earnings and whatnot. So as we get up here, what is going to be the last of that momentum, or that blow off top, is that we have it all right here. And it tells us right here that the next breakout to the half delta movement is going to be 12,723. Then we have a 12,900 up here. Every move in the Dow component is that as we come back up to the top reversal, all the way back up. What a great way to be short. Equities were falling like a rock. Then we came back and we levered back up. And this is how longer, this is a daily trend on our platform. But our platform says something a little different than this platform. That's just a, regular Joe Blow chart. This one here, though, is telling me that in the daily cycles on Friday that we were selling from the top down. This was the bottom up breakout. Look at that daily. Bam. Bam. That's everything you want to see for a bull. However, this bear top reversal from overbought came down in the bull rally breakout. We had to come down because we were short-term overbought. And we've rallied back up to this major teeny line in our platform. Forward looking, we're going to take a look at what this daily consolidation is mathematically here, and that's going to be 12,659. We closed at 12,681. That's that half daily bar right here on the Dow. Okay? And now, having said that, when we go over here to a monthly chart, what we're looking for here is the monthly percent DS at 91%. That's extreme bull exuberance. Bam. We got to 94 right here in the peak, and I said we were going to come down, and we did, and that was at the later end of April. Correction around the corner. Bam. Rising 10-month, rising monthly moving averages, buy signals, everything bull about it, but there's going to be another correction. And we're going to get that next correction, and we're going to be going into the third week of earnings season. And as we wind down the calendar month of July, we historically get into a month of August, which is very light volume. People are on vacation. And it would not be out of the normal or abnormal to get more overbought the higher that we get overbought. So when we break this out, if we break this top resistance line, we're going to get more overbought. That's this line right here. So you can see it in our platform. It's nicer. You can see it that when we break out, that the Dow has a half delta movement of 92 points per line. And these lines are accurate. They're calculated, and it just calculates what the buy and sell public does and how people react. And it's always changing on a daily compounded level. So what I'm calling for is at this top, if we get below the half bar and we break below this teeny line here where my cursor is, that would be a short-term overbought reversal confirmation. However, any move up, the monthly chart on the Dow is going to get more overbought, no matter what. The more overbought we get here is where if the government comes out and does the right thing with the debt ceiling or all of its crap, is that we're going to hit an extreme overbought and we're going to be going short because historically last year in September of 2010 and October, we had big rallies off that bottom in 2010, August of 2010, because Bernanke injected QE2 and we rallied up. What a great artificial stimulus that was. But it doesn't matter. It was great to make money when they did that. And right now the market doesn't have that. So any upside move is to be sold short. Any failure with government is that we break this trend line. This is the long-term trend line in 2007, right back over here on this monthly level. And 2008 monthly, they were fighting it, of course, like they always do, and it went straight down. We called that, oh gosh, that was nice. So the thing about it is, I am declaring an overbought area on the Dow, and that complacency levels are at extreme within the actual yearly trend cycles, and that the more complacent levels, the higher the complacency, that is. Complacent. What does that mean? It means no one has any fear. Everything is great. Everything's just come and go. All right? No problems. That's where the bull community is. And we are at levels that we are extremely on a multi-year level, or 2010. We've been overbought, buddy, at 90%, 92, 94, 93, 90, and now 91. These are the, going back to February, is that we've been in an overbought process for months. We've been in trading ranges and corrections for months. I will say, though, that we are at the major top of all indexes within a short period. Look at this. That was about the government doing something right. It was all headline and earnings related. And these are bullish ass breakout bars on a daily level in a short time cycle. Okay? These were where we started the summer rally, and we're back to the neckline. Any move up, we will be shorting equities on the intraday highs. We'll be looking at put options on all sector indices, all major components, whether Dow, S&P, NASDAQ comp, or S&P 500, is that the put side is deflated, the put to call ratio. When we were down here, the call to put ratio, meaning that the call ratio was deflated and we would rally. But now the put side of the market versus the call side of the market is extremely mathematical imbalanced, and any move up on intraday tops or intraday equities will be sold short, and they will reverse off their highs. That's been going on in all of the July 11 2011 July earnings season. We're going to start the third week of it. And as we get more complacent and more overbought, and all of those earnings do finally get out of the way, we're going to be looking at where that next reversal is going to be and how to get on the other side of that bull rally. Just like we got on the other side of this where the bear was, we got on the bull side of that bear and it worked. Now we're looking at where are we going to get on the bear side of it all, and what that's going to look like in the time frames, whether 5, 10, 15, or 20-day ranges as a calendar month. And each daily movement here has been extremely, boy, you want to be able to identify strength. Well, here it is. That was extremely big moves on the Dow. The higher the volatility goes, the bigger the correction that we have. Volatility only increases when there is an extreme amount of uncertainty and complacency. Uncertain means that the capital markets, they're uncertain. However, the good news, if they come out and the market discounts it and the uncertainty part leaves in the short term, we're going to rally back up here. But as each rally goes up, we get more complacent and we get more overbought. That's why it's time to sell into rallies on the Dow Jones. Do not get caught in the exuberance. Be proactive. Use risk management. Use money management skills. Check with your financial advisor. Maybe they can help you. I'm not here to do that role because I'm not a financial advisor. I don't, work that way. So I'm not one. And what I'm saying to our MMTs and our database is that this is what we're looking at and how our trade management will be. Now, if you're an innocent bystander looking at the Dow analysis, you really need to check because you're not in our program, okay? You're not in our yearly school or anything like that. So you better check with your so-called experts that you know and get your decisions from there. I'm telling how MMTs are going to make good decisions and where we're going to get overbought and where that reversal is coming. I am in an overbought zone. I'm very complacent. I'm going to take a look at the bear and the bull, both. And I know that I go higher, I'm going to sell in to the move. I'm going to short the market. The higher that I get, the bigger the short that I'm going to get because we're going to be more overbought. And here we are right here. We're at 91.94%. The peak was back in the monthly level at the close of the month. It was 94.8. So we got time to break the top. But it doesn't matter. What matters is on an intraday level, and as we clear out the earnings season and the debt ceiling gets resolved, if it doesn't, you're breaking these lows. You're going to see, and this is the long-term trend line right here. It has a significant role. And it hasn't closed below it all of 2011. It's because of the bull. And I'm just letting you know that the pendulum is going back up. Sell into rallies, sell short intraday highs, and the volatility only increases when uncertainty levels are uncertain. People are uncertain. They don't know what the hell is going to happen around Italy, Spain, Ireland, Portugal, Greece. Oh, you already know that one. What about the key, what is Germany? All your emerging markets have already signaled problems in the long-term structure. What I would like to say, though, that all of these expansionary rallies at some point end up in a very bad way. And they do. They never come out on top. They always end in a very ugly way, like this one. And we've had the first year bull rally. We had a consolidation and a second leg up in the yearly bull rally. And we're paying the price. Is the price that can be paid is that when you look at this carefully now, you're right back up here. But that rally failed. that expansion rally, all stimuluses. Stimuluses. Oh, stimulus is a bailout nation taxpayer. My point of the story and the reality of what will happen forward looking, you can come back and look at it because this is recorded. Just like we do everything before the fact. But how do I prepare myself? Is that if we break the tops, we go up, we put in another high, and we reverse. The more overbought we get, individual equities, MMTs, on their intraday highs, sell short. That's the Dow. The bond market's going to be right. The Federal Reserve, well, they can't beat the bond market. Not one of them have. Never. Ever. Never. We'll talk about the bond market one day and what a forward-looking indicator that is. The bull rally is strong. However, we're going to get to another overbought level, and I'm calling sell short.